this is the return on equity analysis demo. And again, I do this in my residential classes, but thought it would help you guys too in the online classes. So, got a little bit of a cold. My voice seems to be holding out, so things are good. This is the return on equity assignment sheet. So, these are the bullet points that you're to answer about your chosen company. And so most of this can be found on the face of the balance sheet or the statement of stockholders' equity. So I'm going to be flipping between this document and Caribou Coffee, which I decided to analyze this time because I can't remember every single bullet point. So let's go ahead and do that. What was the stockholders' equity for the years you're analyzing? What seems to be the main reason for the change? And what is the largest component of stockholders' equity? And so when I go to Caribou's, let's see, what do I have here? This is the changes in equity. I'm going to go up to the balance sheet for that information. This is the income statement, and so here's the balance sheet, and this is the equity section of the balance sheet. We've already analyzed all of the liabilities up here, and equities are up at the top. So if I look at equity, I have the paid in capital part, which is all of the stock information, and then I have the retained earnings part, which is down here. And in this case, they have an accumulated deficit. So Caribou does not have retained earnings. They must have had some pretty big losses in order to have a deficit there. Because remember, in your retained earnings account, it's all of your earnings from the start of the company and minus any dividends that you've paid. So if Caribou has had some losses, they're still recovering from those. That's why it's called accumulated deficit instead of retained earnings. So you may find that as well in the company you're analyzing. All right, so we start with preferred stock. 1 penny par, 20,000 shares authorized, but no shares issued and outstanding. Okay, so there would be no dividends that have been paid or anything on that preferred stock. Then we have common stock, par value 1 penny, 200,000 shares authorized. Oh, geez, what did I do there? That's the income statement. I gotta go back up here. Sorry, I shouldn't use my arrow so much. 200,000 shares authorized, 20,848, and 20,141 issued and outstanding. Okay, so those are for the 2 years. Okay, so 20,848 in 2011, or I'm sorry, 2012, and 20,141 in 2011. APIC, comprehensive income, which we don't deal with in this class. That's definitely an accounting concept. So if you're an accounting major, you'll look at that in depth. And then the accumulated deficit, which is actually the same thing as retained earnings. It's just negative retained earnings, if you will. Okay, non-controlling interest would be another company that Caribou owns, so we're not going to pay attention there either. So these are the amounts of each of the zero on the preferred stock, common stock, APIC there, which is what they're asking for. Now it would appear that there is no treasury stock because the issued and outstanding are the same, but when I scroll down to the statement of equity, which or a statement of changes in equity, it does show some share repurchase. Okay, and so that is here. The reason it's not on the balance sheet, I would guess, I could dig into the notes and find out, but I would guess is that they repurchased those shares and then they issued them as part of restricted shares or as part of a employee purchase program or something like that. So that's why we're not seeing them on the face of the balance sheet. But yes, they do have some share repurchase, so they have had some treasury stock in the last year. Okay, as I'm looking here, I can look here, accumulated deficit, that would be my retained earnings, and I can look down and see if there were any dividends paid or declared or anything there, and I see nothing for dividends, so there were no dividends paid, and they can't pay dividends because in order to pay a dividend, right, you have to have two things: enough cash to cover the dividend and the retained earnings to cover the dividend. And since they have an accumulated deficit, they are not ever gonna, they can't pay a dividend until they get positive retained earnings. Okay, so let's go back to the analysis sheet. So we looked at what was stockholders' equity, and there you want to look, that's the total amount. Okay, so when you're looking at total shareholders' equity, you can look down here, 62,466, or you can go up here to the balance sheet, and it will show right here, total equity, right there. Okay, um, so that's what that's asking for. Main reason for the change. So look at what happened. Did they sell stock? Did they pay dividends? Did they repurchase stock? Um, if it's APIC, then it's the sale of stock. That would be the biggest change. Okay, if APIC is what changed the most, and that's just because of the market value versus the par value. At a penny par value, and a market value of even a couple bucks, APIC is going to really increase a lot if they issue shares. What is the largest component? Again, right there on the face of the balance sheet. Any preferred stock, we looked at that. You can scroll through the notes and look for something called preferred stock. Um, let's do it quickly. These videos are only 15 minutes, and I know you probably get bored listening to me. So, but let's just see if we can see anything listed as preferred stock here. It would probably be there's some stock compensation, and so that would be they probably repurchased some of the stock. You can read it, and then through that treasury they issued it as stock compensation. Probably isn't anything really there that you need to look at. And I'm not seeing anything that stands out in stocks here as I'm scrolling. Equity and stock-based compensation. There probably isn't going to be anything in there that you need to look at. There might be some stuff on the treasury stock, what they do when they repurchase the stock. Um, and stock option activity, I would stay away from that. Again, you cover that in intermediate accounting if you are an accounting major. So at this point, I wouldn't expect that you would spend time there or really have an understanding of that. And then taxes. So I'm not seeing anything, benefits. Yeah, I'm not seeing anything here um, about dividends or preferred stock or anything like that. So there's no information there. All right. So let's go back up here. Does a company have preferred stock? How many shares issued, authorized, outstanding? That is on the face of the balance sheet for Caribou. It could be in the notes of your company. It may not be on the face, although usually it is. Okay, now we go to the statement of equity, and that's where you're going to find dividend information. Okay, so how much in dividends? I did see on one person's company, and I can't remember what the company was. I want to think it was Target, but it might not have been, where that dividend information was on the face of the income statement right under earnings per share, and it just gave dividends per share. So um, you can take and divide the two. If you just have a total dividends number divided by shares outstanding, now you know what the dividend per share is. Okay, so you got to kind of think here um, to answer some of these questions. Spend some time on this. Okay, don't just tell me it's not there, or I couldn't figure it out, or something like that. If you need help, just email me and show me what you have. Show me your formulas. I'll email you back. I can bring up the financials pretty easily and help you out with that. I really need you to understand this. The equity section of the balance sheet is very theoretical. It's not always actual dollars. It's not always hard transactions and things like that. So I want you to understand some of the games that are played in this section of the balance sheet. Okay, has the company repurchased any of its shares? Yes, Caribou did. And the effect would be a negative effect, right? It reduces equity, which is why those repurchased shares are in parentheses on the statement of equity. Okay, we don't see it on the balance sheet though, so they may have been reissued once they were bought back. And then what is the return on stockholders' equity and what is the rate of return on common stockholders' equity? And that information is on page 524 and 525 of your book. So look at that, read that. That's calculations that you have to do. If you don't have preferred dividends, you're going to find that those two numbers are probably the same. Okay, so just explain that to me. All right. So that was easy. And if you have any questions, just let me know, and I can help you to answer those. So with that, have a great week, and hopefully, hopefully you'll find this not too difficult. I'm gonna try to end this here, but I can't see the buttons, which is weird.